Good afternoon, everybody, from a very wintry Melbourne-like day in Perth. Very rainy, very cold, very windy, and the markets are equally unsettled as the weather is today. And with some justification, we've got a big day ahead, and my job here is just to sort of try and calm the storms a little bit, metaphorically speaking, and just tell you what's happening and how it is, and put some sense behind all the stuff that's going on. Just let me know you can hear and see me okay. That would be great. G'day, Ross. Hi, Rachel. Hey, David. Shane, can you pop through an email and I'll sort that out for you, buddy? Great stuff. Afternoon, Rod. Good to see you here, mate. Hi, Michael. Hi, Alison. Hey, Josh. Right, let's kick things off. And obviously, we've got to put this important message up. These are my opinions and not necessarily that of Go Markets, and hence you should take that into account, as well as the fact that this is for educational purposes only, and you have rules and regulations. I'm hoping, as far as you're concerned as an individual trader, that not only manage risk, of which there's much potentially over the next 24 hours, but also, of course, enabling you to do successfully on a sustained basis. Okay, so that having been said, let's look at what's come across the news. Obviously, overnight we had small losses on Wall Street. Investors are cautious with this big day today ahead. We've sort of been ramping up to this for the whole week now. US futures are mildly negative, although the Nasdaq has turned positive. We'll have a look at that in a moment. Now, Asian markets are just behaving very unusually. We had a very ordinary start, really, but really since market kickoff, we've moved higher, and we are actually seeing the ASX close to 0.5% higher. Whether that'll hold, despite the forthcoming events, remains to be seen. Of course, we did have that weaker US lead, and we are bracing for some inflation news. On the back of that, US dollar index has been trading higher yesterday. Precious metals have continued their move downwards, and FX remains range bound on longer time frames. The market is in uncertainty, in pause, not scared so much, but as we can see that by the only slight movement higher on the VIX. And we'll have a look at charts in a moment. Cryptos are trading positively on the news that Ecuador are going to allow it as legal tender, which is just odd and unusual. But it is a massive day for market data. It is inflation sensitive environment, and we've got US CPI data out, and we've got the weekly jobs numbers, which sent the market into a little bit of a panic last week because they blew expectations out of the water. And just if that wasn't enough, we've got an ECB interest rate decision, and more importantly, the policy statement that goes along with that. Now, even though that on the surface would appear to be an important number, the reality is it's going to fade into insignificance compared to what happens later in the day. So around about 10:30 p.m. Melbourne time, or 8:30 Perth time, or 1:30, I guess, in London time, then expect some major market action. And hence, you need to be thinking about that right now in terms of where you're positioning, how you're positioning, etc. So let's look at some detail around that. I just want to make sure that all the screens are functioning as they should. Yes, they are. So we'll look at the futures first. You can see there the Nasdaq is each slightly positive, as has the Russell. We've got the S&P and the Dow slightly negative. We've got the US dollar slightly higher. Commodity-based currencies looking a little weaker, but they're better than they were earlier in the session. But we'll have a look at some charts in a moment. But you can see there's very little movement going on. Really, there's maybe a little bit of safety going into yen. So I'll maybe have a look at the yen commodity-based currency crosses. You can see gold and silver are looking pretty ordinary. Oil has come off its highs a little bit, and copper's obviously a little bit weaker as well today. So But really the moves aren't significant, and that's really a reflection of possibly a little bit of repositioning going on. If we look at the economic data, we had some consumer inflation expectations coming out of Australia. Notice they beat expectations. We had some PPI data, so that's essentially inflation in the business world, to put it quite simply, and that again from Japan beat expectations. So really we're sort of holding our breath for the numbers later on today, really. As I said, we've got the ECB, ECB popping out some interest rate decisions. The policy statement there'll be an initial policy statement comes out with that, and then more detail later, as you see. And that comes out at the same time as the CPI. Now the year-on-year figure is likely to be fairly significant simply because of where we were last May, but you'll see the expectation is again a step higher than last month's extraordinary figure. It's a month-on-month figure that's going to be important. Notice that this is sort of slightly down now in terms of expectations. That's interesting, and if that holds, if we get a figure that comes in either at or below that number, the year-on-year figure doesn't explode into the stratosphere, then we could get quite a positive market response to that in certain asset classes, obviously stocks, commodity-based currencies, base metals, and of course vice versa. If it beats expectations significantly to the upside, we're likely to see a market sell-off, bond yields rise, all of those things that we've talked about before. It really is flick of a coin stuff, and so just be aware of that. And of course the weekly jobs claims are going to be playing into that number as well, although possibly there is or there is thinking that a lot of this is already starting to be priced into markets. And we'll just have a look at some charts just to sort of reinforce that. If we look at the US 500 daily, you can see that's gone nowhere. It's just drifted down very, very slightly over the last 4 days, but you can see how really the market's been unwilling to plant their flag in any positive move higher. Expect this support. This is what happened. This is what happened last Thursday, and the S&P 500 got away relatively lightly. If we look at the Nasdaq, which has floated higher in Asian trading today, let's just pop it on a daily chart. You can see here that this is what happened last Thursday. We've got Friday's reversal because of that US non-farm payrolls number coming in weaker than expected. There'll be no such safety net this time, and so we would expect the Nasdaq, if that inflation number comes in higher than expectations, to pop down to 13,400 perhaps. You can see we're in a triangular place with that chart. So again, despite copper's strength, we've hit a little bit of a block until we get some more information in. Okay, I'm not sure how long the audio is out for. I'm just going to close some of these. I am hammering the internet a little bit, and there's a storm ahead, so I'm just going to close some of these down. I'll quickly show you where Asian markets are. You can see they're all positive, and that's significantly better than it was today. Let's close that down. Let's also close down the futures, I think. Just to give us close those down. Yeah, we'll leave the rest open. All good. Okay, so hopefully that's resolved the situation. And if we look at oil, Brent's been on a great run, a little bit sort of neutral yesterday in light of what's going to happen over the next little while. So there's a bit of risk coming off the table, not surprisingly, because we've had such a good run up in Brent over the last couple of weeks or so. We're all good from a sound point of view. Okay, just to reinforce the US dollar, it is drifting higher because of that inflation expectation. So there we go. Okay, so VIX, as I said, the VIX is just edged up a little bit from these extraordinary lows. So a little bit of uncertainty coming in, but not significant. Again, I'll just close some of these down as well. That might help. And if we look at the ASX futures contract, you can see we've just stalled here around this 7,300 level, although this is record highs that we're at right now. I mean, it is quite remarkable. We'll have a look at the ASX in more detail later. Looking across the currency pairs, triangular on Euro USD on the daily chart, and really we've got 122.30 at the top end, and this 121.60 it seems to be holding on the bottom end. So really it's a wait and see with that. We may get some movement with the ECB, but I very much doubt it. If we look at US yen, you can see it's crept up over the last few days, but trading within a very tight range. There's Thursday and Friday respectively. So again, expect some movement from that later. If we look at Aussie USD, I'm flicking through these pretty quickly because I don't see anything worth doing versus US dollar at the minute. You can see trading in within a range of about 1 cent or 100 pips, if you like, and slightly positive today, but not remarkably so. And we can see Bitcoin there has really sort of held on to support, moved its way back up to the 200 MA, and that's where it's at. So not a great deal of movement, still looking pretty triangular on that, and market needs some reassurance that cryptos are a good place to be at the moment. So the major opportunities may be outside of the US dollar crosses. So we are seeing some weakness in the commodity-based currencies generally. So if we look at the Euro, New Zealand dollar, you can see we're up tight on the daily chart. Although we're off our highs of the day so far, around about this 169.85 level, you can see that also corresponds to the 200 MA. That's preparing itself. Commodity-based currencies are likely to be hit very hard if that inflation number comes in strong. So even though the euro won't do particularly well against the USD, if that's the case, we'd expect it to do okay against the commodity-based currencies. GB pound Aussie, we've been tracking this really since it sort of attempted to bounce off support at 182.27. If we look at a 30-minute chart, you can see it's now moving into a triangular pattern as well. So much the same there. Now, one that did catch our eye a little bit was the New Zealand yen, and this is going to be our FX chart of the day. Now, the reason for this is I suspect as that inflation number comes closer, we may get some risk off, in which case we'll see the Kiwi drop. At this stage, it seems to be holding on to this support at 78.55, and it's not just on the hourly that this is the case. If we look at the 4 hour, you can see the significance of this level, and even on the daily, of course, it's used this as a resistance and then subsequently a support. So this level is really quite important. We're actually going to use a 30-minute chart for this as our chart of the day. So we'll just bring this right up. Now we'd want a break of 78.50 to the downside to get interested in this. With a slight bounce in commodity-based currencies when that Australian consumer inflation expectations number came in. But really, we've got to be hyper patient with this, and then when we are in, very nimble. Okay, so really tight trail stops behind any position that you open today outside of equities. But that's where we're planning our flag. We think that might do okay if possibly towards as the European market opens and we get a feel for where the market's sitting pre-data announcement. So we've probably got about 4 or 5 hours window before that data comes out, where we may see a significant move as the market repositions. Okay, so that's GB pound yen. Let's have a quick look at that. Drag it on. So, okay, so we've got, if we look on the hourly chart, we've got sort of almost again a support around here. So it is looking a little bit like a descending triangle. Agreed, Ross. I don't think it's broken it yet, but I think again that'll be worth checking in on later. I'm not sure I would bet against the yen. I will probably go commodity-based currencies. I think they may get you the better result, but nevertheless, certainly worth keeping an eye on. Not sure why the GB pound has been a little shy this morning. It was looking strong earlier on, but it's just pulled back a little bit. So not quite a break of the bottom of the triangle yet, but it looks as though it's shaping up potentially that way. But good spot, and thanks for sharing that, mate. Okay, let's have a look at the ASX now. As I said, what's interesting about the ASX is where it's at. If we look at this, we can see it's at 0.4%, and it seems to be holding that. So really, we've been flatlining for about the last couple of hours or so. After a weak start, and pretty soon after everything was open, we started to move higher. And certainly once that inflation number came in, interestingly, you would expect that to be quite bearish for the markets, but the market sort of maybe taking that as a sign, well, look, the economy is doing okay. And if we look at advances versus decliners, we can see it's around about a 2-to-1 ratio. I'll come back to your question in a minute, Stephen. We'll just, and in terms of things that are doing well, there's a few that are catching our eye. Afterpay is at a very interesting level. We'll have a look at that. We've got a mixed story in the banks. So we've got ANZ down, we've got CBA slightly up. If we scroll down here, we'll see that that Westpac are pretty neutral. We've got some drop off in energy, obviously, because we've just got a pullback in oil prices. So Woodside or Search not doing particularly well. In the commodity space, we've got BHP down about 0.5%. And if we look down here, Oz Minerals are down around about the same. Now, these two are holding up simply because copper isn't yet moving downwards. It's pretty stuck. And possibly iron ore prices helped hold these up a little bit, which did move higher yesterday. One sector which is doing well is, and I've already referenced Afterpay, is that sort of business finance area. So we're seeing zero up, almost 2%. We'll have a look at a chart of that in a moment. Zip is pretty neutral, trading around that. And one of our latest favorites, EML, is also looking pretty strong. That was our chart of the day for Tuesday from memory. I can't remember whether it was that or PLS. It was one of the two. I like them both. So a very, very mixed picture on this. So let's go and again have a look at some charts and see if we can see what's happening. So what I thought I would do first of all is, of course, put on ones that we've talked about recently. So there's Afterpay drifting nicely higher back towards that 200 MA. We did actually break $100 intraday yesterday, but failed to hold that. So this 101 level is really important. I'm not sure it's got the momentum to break that, but that's where the 200 is sitting. The 200 MA is sitting. If it wasn't for that, we'd be quite happy getting into this if it closed over $100. But the close proximity of that 200 MA just means perhaps a little bit of caution is worthwhile. Now, PLS doing very well today, considering, and holding its own at around about that 136, 137 level. So pretty neutral on the day. I think even maybe up 0.5%. So that's holding up well and continues to be one that we think may survive an inflation an inflation spike, as well as anything. The banks may do well or hold their own as well, but if there's an inflation spike, this may do okay. It might drop down a little bit, and certainly technically it would make sense to possibly trail stops up to the 10 EMA on this, or maybe even higher, just below that key level around about 133, 134. So that's PLS, and so continues to be one that we like, and has been for a little while. We mentioned EML up again today. This was a very good trade that just seems to have continued its merry way up. Now, we've got a target on this. When we talked about this last time, we said, well, watch around 413. We could see some just over that $4 level. I'll actually just bring that down a bit. I like it best around about 407, so you can see how there's resistance here, support here. But this is closing the gap very nicely and is in that sort of business payment sector. So again, nothing yet to sort of say, well, look, we need to sort of get out of this as a matter of urgency. Now, it could be the sort of stocks that you might take profit on. In this situation, I think I talked about this when on that share CFD session on Monday. If you're faced with a high risk situation in the markets generally, and you're looking to close positions, then if we look at something like EML, let's use this as an example, then what we might look at is, well, look, in terms of the upside potential on this, now there's still around about 2.5% in this. The downside potential on this, if it drops, it may drop down around 3.5% if we get a bad number from an inflation point of view. So you're faced with the choice of potential to the upside, risk to the downside. If we take it off here, we could look to re-enter if it breaks 407. That's the way we sort of look at. In terms of, to answer your question, if we use the ATR as a guide for a trail stop, well, look, 1.5 ATR would be enough, particularly if you're using 1.5 ATR as a trails, as a way to set your initial stop. So it's one way that people would do that is that so say, for example, something went up 1.5 ATR, they would shift it to break even. If it was up 3 ATR, they'd shift it to 1.5 ATR. So you're keeping that risk level all the time at that level. It is an alternative to using something like the MACD, or in this case, maybe we would revert to the 20 EMA on this. You can see both of them are pointing up, but because it had such a drop, then good to see you, Andrew. Good to see you here. So EML looking strong. TWE, another one that I think were our chart of the week last week, continue to push higher. We are at highs. If we close here, these are highs we haven't seen for, just take it back to the weekly chart, since August last year. This 1230 looks very much on the cards. And again, if one looks at what happened on Thursday last week, then we did get a candle which didn't hold its own, but it wasn't down on the day, it was pretty neutral. So this may be relatively inflation proof, perhaps, compared to some of the resource sector. So if we look at BHP, for example, here, this is what happened on Thursday last week, and we haven't really recovered fully from that. So this is the sector that's going to get hit hard. So base materials and tech, if you're in the US, are the ones that are going to get hurt if that inflation number comes in very strong, and vice versa, of course. If we look at banks, bleh, okay, nothing going on here, but it is one of the sectors that could benefit from inflation data coming in too strong, bond yields rising. You can see that's today, that's Wednesday, Tuesday, Monday. There's Thursday's action, follow through on Friday. That's the important one. And then the drop off on Monday after that non-farm payrolls came out. So you can see this is the reverse perhaps of what happens in the materials sector. But neither, in the same way that you wouldn't want to be over-positioned in resources, neither would you want to be over-positioned in banks. Looking at the retail side of things, there's JB Hi-Fi using the 200 MA as support. Not liking this at all unless it starts to threaten that sort of 48.65 level. So keep that on the back burner. Qantas has pulled back. We'll just have a quick look at that for you. We talked about this moving up nicely. You can see Qantas is a regular thing. We made a little bit of a trade on that bounce, but you can see really it's struggling to hold that 200 MA, and $5 really is the next level at which we'd be interested in Qantas. And also just wanted to, our chart of the week, or one of the charts of the week last week, was Worley. That was a potential exit there because it hit our profit target. We talked about this on Tuesday, and you can see why. So there, when it failed yesterday, that would have been the last point to get out, I would suggest. And look what's happened today, and that's a risk-off trade, very much so. But that's why you have a profit target sometimes on these stocks, is that that was an obvious technical area that it may well pause. So that was a good example of that in action. LYC, yep, sure. I'll put LYC on so you can see there's LYC. Still quite happy finding support there. A little bit down today, but not dramatically so. Almost made its way back up to neutral. Wouldn't be interested in a new position in this until it had broken that 555. We've talked about that before. And in reality, what that will create is almost a double bottom type of formation. So that 555 looks key. So just patience, see where the land lies, perhaps tomorrow on that. Any others you want me to have a look at, just type them in. US is looking pretty much in pause. Oh, sorry, I meant to look at QBE before we, because that was another one we referenced as to keep an eye on, and that's having a good day today as well. So this was Tuesday's session. We talked about, well, look, it's had a great run up now. It may well be pausing around this 1135 level, but you can see there was the high close previously, and we're actually just poking above that a little bit at this stage. Again, one that's not likely to get hurt significantly either way, really. So QBE could be one to watch. Okay, so if we look at the banks in the US, they've really sort of come off a little bit, but are trading within a range, waiting for news for tonight. Outperform last week, we sort of looked at BBY. I think we looked at them last Thursday. This was obviously an earnings peak. You can see, although we had that pullback, we are liking this to hold above that 32.65 level. So if we get a break of the closing high there, then we could get some significant buying coming into this. So that's one of our favorites on the US. In fact, we'll make this our US chart of the day. So we're looking for a close above 36.50 with a potential upside of around about $10. We'd like to see it actually, let's put our profit target around about here from a technical point of view. Would like to see it up there, and that's 18%. So BBBY is one. So Bed Bath and Beyond is one that we think may do well, irrespective of what happens tonight as well. But that remains to be seen, obviously. So you're best waiting toward see if you're up, see how the US market opens, and then subsequently you can see where it's traveling. PayPal, one of the ones we had a look at last time. Let's just have another look at those. And they've essentially paused. They looked as though they were going to break out last night, but failed to materialize, move towards its low of the day. And you can see that that resistance is still very much intact after yesterday's price action. NEA for sure, Russell. Let's have a look at NEA. Not one I'm familiar with. Nearmap. There we go. Let's pop this on the chart. Just give it a couple of minutes just to load all the data up. So that's where we are. It's just calculating. You can see with the back data, but it's certainly an interesting chart. Thanks for that, Ross. But technically, you would see, well, look, there's a fairly good resistance there. Nice double bottom formation going on, but the last two sessions we've failed to hold a move higher. So with this, we'd be looking for a break of perhaps 189 to take it back up towards 209. So not a massive amount in this, but a nice, fairly healthy sort of 6 or 7% perhaps, to take us up to around about, to test that $2 level. You probably set a profit target at $2, and that's not a bad chart at all. Sonic. Sonic are just drifting up, being choppy, drifting up towards that resistance. So not really interested in looking at this from really, if you were going to do it, if you're going to do Sonic, then the opportunity has probably gone to take advantage of a break of that 35.25, but expect a choppy ride with this. I think that's where healthcare is at the moment. We can relook at Coles. Here's Coles. Peaked last week. Again, I think this was a chart of the day last week. Peaked up and has really sort of dropped back down to that 200 MA. So really sort of probably done what it wants to do. If you're not in this already, $17 looks like an interesting point to try and potentially close this gap. But only about 4 or 5%. Coles isn't a big mover for obvious reasons. It's pretty consumer staple side of things, which tends to be usually quite mellow. So we're going to make our chart of the day for today. We're going to make it PLS for two reasons. First of all, we'd like to see it break this level here at 138. So if it breaks 138, then we get very interested in this. We also feel that it is, as we've talked before, relatively is going to be still relatively okay if there is a bigger inflation number, provided it doesn't get too scary. And from a US point of view, we've got BBBY as our chart of the day. From an FX point of view, just to reinforce again, we are looking at the Kiwi yen. But again, it's patient, and if this doesn't happen by, say, 5 o'clock Melbourne time, we probably wouldn't be interested in it at all until after that data is released. So we're looking at an hourly chart. We're looking for a break. Sorry, 30-minute chart, wasn't it? and we're looking for a break of 78.50 to the downside. Any others you want me to have a look at, guys? APT, yeah, we'll look at APT again. We did mention APT before, but it might have been lost a little bit. So looking pretty strong. But the thing that concerns me with this, if it wasn't for that 200 MA, I'd be looking at this as an entry now. But that 200 MA just gives it a little chance to confirm that we are back in uptrend again. Lots of space. I would watch this for sure. If it breaks that, we've got a nice big fat move up potential. Afterpay looks as though it's shaping up for that, but possibly I don't think it'll break this level today. If you're in this already, it's a difficult one. Depends what else you've got. It depends what else you've got sort of in the pipeline. As I said, if you're holding one or two positions into tonight, well, expect to move either way. But it is flip of the coin stuff. If you've got more than that, it might be worth just taking a bit of risk off the table and reassessing tomorrow. AMD, I know that was one of interest that we talked about last time we're here, but you can see it's really failing to break this $81 level. So now I would be, there we've got the data catch up. So I'll be putting any potential entry even higher than that. I actually don't like this as a chart. It looks very, very choppy, but maybe a break of $83 would be interesting. But you can see this sector just seems to have lost its way a little bit in terms of. So I think there may be some people positioning for the long term in microchips, but really you can see how noisy it is. And so I think there are clearer opportunities for trend formation and follow through elsewhere. Beyond Meat, that was one of the ones we discussed last week, and really has made its way back up to this resistance that we put on last week, I think at 153.81. We like the fact this is broken through its 200 MA. But that 153.81 looks important. If we get a break of that, then we're up around about 8% to the next key level at 166. So again, that's one worth keeping an eye on, particularly if we get a good move tonight. Again, pretty inflation proof in terms of its direct impact. Okay, guys. Checking through. Oh, euro yen. Yeah, sure. Start looking. So you can see the euro yen looked actually quite bullish yesterday. You can see how we've had a bounce off. I'll just put it on the line chart. You'll see this a little clearer. There we go. So there was the previous key level there, and a little bit of an intraday test there. As you can see, there was a nice bounce over the last couple of days, but really today it's failed to follow through. So if we look at a 30-minute chart, it looks as though it's found some temporary support. It's dropped off over the last couple of hours or so. Well, since Asian Open, really, there's Asian Open there, flatline for a couple of hours and then dropped off. But really, if we look at this, you're thinking, well, we wouldn't enter this from a technical point of view, probably until it had broken 133.18. You can see all the support that's in place there. If we look across 1, 2, 3, 4, 5, 6 touches, so that looks like a quite important level. But how much can we make from this? Well, about 14 pips. Okay, so you've got to be so on top of a trade like this if you're going to get interested in it. However, if we sort of do break to the downside, we do break this 133 level, then again, we could be in a place where we get some major selling. John, can you look at GB pound Aussie dollar? Yes, I can. So we're expecting a little bit of a, so I'm looking at the 30-minute chart again. On the daily chart, we're trading around key levels. Okay, not surprising there, it is on everything. On the 30-minute chart, so let's just take a couple of these lines off because it's just making it a bit cloudy. And we'll start this from scratch. So put it on a line chart. So this is always where we start. So we can see the support at that point there. Okay, touch there, how to go here. Okay, we can also see that it's trying to bounce off this level at 182.26, but without conviction. So it had a little go yesterday and then came back. A little go today, then came back. Okay, so we're not compelled to this. So we've got no real clear, and this is starting to look triangular, which says we have not an idea until we've got some more information about which way to play this. Okay, if we do get a break of 182.26, that could be when we get to, that could precipitate some more selling. But even if we break this triangle to the upside, we're sort of limited to just a handful of pips. So we'll be really looking at that 183.11, 183.12 to get interested on the upside as well. I hope that's useful, John. Let's just check on our Kiwi yen to see how that's doing. As you can see, it's really not that dissimilar in terms of just looking for some direction without any. A GB pound, a New Zealand dollar. I think you're in the right ballpark, guys, looking at commodity-based currencies, but really, again, even on the hourly chart, this now has a line to the top side there and a line to the bottom side, probably around there. And arguably there, really. So if we break to the bottom side, we're limited to 24 pips. If we break to the upside, we're limited, less limited, but we've got potential 69 pips. So again, I'm not seeing a potential trade in this over the next few hours. I think the data or the timing of the data will catch up on us. If you're trading 5-minute charts, then by all means have a look at this. So you could sort of suggest, well, look, it's breaking through here. There's potentially a 13 or 14 pip movement, but that's where we're at today. It really is that sort of market. You're welcome. Okay, guys. Well, look, I hope that's been useful. It is a day. I hope that's helped in terms of making some decisions going forward. Peter, you're welcome. Josh, you're welcome. Trade safe. Hey, it is going to be an interesting 20 or 12 hours, should we say, from now, and may well dictate what happens for the next couple of weeks or so. So just be on your guard, and yeah, look after yourselves, and enjoy the rest of your day. You're welcome, Rachel. Cheers, Ewan. Thanks a lot. We'll catch you again very soon. AD, always great to see you here, mate. Hope you're doing well. Okay, catch you later. Bye-bye for now.